Hello traders, Gary Wagner here just before 12 noon in Honolulu, 5 o'clock in New York. It is Thursday, March 5th, 2020, and this is the Daily Report for Gold and Silver. After yesterday's subtle and quiet move, we had a return to the kind of action we saw at the beginning of the week. Today we saw a major rise. Now it wasn't $42, but it was dynamic. There are some key events that are occurring that are telling us that on a fundamental basis, gold should continue to rise. There's alarm by global central bankers, including the Fed, the emergency rate cut, for example. The members of the central banks believe this is going to get very serious. That's why they're taking these precautionary measures. That's unheard of. We haven't seen that since the financial crisis in 2008. We are truly in a time when we could see further downside in the Dow and gold continue to move higher. Let's take a look at our price board and we'll talk about the trade that we put on when we look at our technical studies. It was another day of utter devastation in U.S. equities as we saw all of the indices trade lower. The Dow lost about 3.5%, the composite index about 3%, and even the S&P closed down by 3.39%. Gold did run higher. It closed up about $30, $16.7310. That space is April. It did hit a high of $75.50, so we're just a couple dollars off the high. And the fact that it held those high is significant to me. Now, there's a couple of reasons that we did issue our trade alert today. We'll cover it in detail, but most importantly, it was this double top here and here, as well as a Fibonacci retracement level that we ran through that were the deciding factors to pull the trigger. So let's take a look. Platinum did close lower on the day, 866.6 down 860. Palladium did gain about 2.9%, $69 at 24.54. Silver had a good day, up over 1% at 1743.5. And as I said, we talked about April gold. When we look at the cash gold market, that's at 1672.15, up $15 on the day, and that was all weighted by a falling U.S. dollar. Take a look at that, folks, down 0.8%. Let's take a look at our technical studies. The first chart that we'll look at on today's show is going to be the dollar index. It's that significant of a drop. It reached almost 100. This is 99.75. This is the end of that tremendous rally that began at 96. And then take a look at the last couple of trading weeks. Consistent and sizable candles, but today was the largest single day drop we've seen. We are at 96.52. There is no doubt the difference between what gold was doing on Friday and this week are night and day. Friday was that extended drop, a tremendous drop in the market, but then Monday was that inside trading day that was a doji. We labeled that as a Harami cross. We labeled the following up day. This was the $42 day that occurred on Tuesday when the Federal Reserve announced an emergency rate cut in between FOMC meetings. The last time that occurred was during the financial crisis of 2008. Now, we were hoping for a strong confirming candle to enter yesterday. We did get the higher high, we got the higher low, but we closed below the previous day. And the other thing that I saw was that we closed just at this 0.618% retracement. The retracement is simply looking at this high down to this low. So my sense is that when we broke over this top, this double top, which is here, and then we broke above this price point, it told us one thing, that this market was headed higher. My sense is that it will challenge the current high around 91, and I believe that it's going to make a play to go above 1700. all things being equal. We entered the market at 68. The market's trading at 73. We placed our stop right here, which is below the low of yesterday. We want some safety because we have an extremely volatile market. Traders, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.